Welcome back to the Deal Room, where we break down the real world challenges and strategies behind multifamily real estate investing. I'm your host, Don Favia, and today's episode is all about something investors rarely talk about: protecting the people behind the portfolio. I'm joined by Jorge Rabasso, a seasoned insurance advisor who works with high income professionals and business owners to make sure their life, health, and long term security are covered. If you've ever thought insurance was just paperwork, this conversation might just change your mind. Want to welcome Jorge Rabasso, a good friend of mine, to the podcast. It's been a little bit of a delay between the last podcast and now, but I'm glad we finally were able to get this one on the calendar, and we're here. So very excited for this. Jorge, welcome to the podcast, and wanted to see what you could speak about your experience in the insurance industry. You've been in it for over 25 years. Can you share with us about how you ended up doing what you do, and how it seems like you're in love with it, obviously, whenever we talk. So love to give you the floor here.
Yes, yeah, thank you, Don. And you know what? Well, let me talk just a little bit about what the American dream is for me. And one of my American dream is to be talking, in this kind of podcast, and it is to be talking in front of public to explain what I have done for 25 years helping people. I really appreciate the opportunity you're giving to me. And see, it's my story is an immigrant story who arrived to the United States without English and without money and start from scratch.
Yes.
And
Yes.
sometimes I asking myself why I start with life insurance, disability, long-term care, and health insurance. And this is a question, that I say, well, because I like to be with people for all my life, and I like to help them. Let me tell you, I started working when I was. I thank you for this opportunity. Have I said this before? That's the first.
Hey, the honor is all mine. I'm so happy to have you here.
This is the first thing I want to say. I really, really appreciate this opportunity, and you are giving me the way to do my American dream again. So, I started to work when I was 9 years old in my country. Sometimes people stop me in the field and in the street and say, Jorge, hey, I know you. You are from Boston, right? I said, no, my accent, think that I'm not. I'm from Buenos Aires, Argentina. And
Argentina.
I start to work as a sales guy when I was 9 years old.
Wow,
And
9 years old.
9, yes. It was shoes for women. Then I sell toys. I sold, things in the street. So I was in sales all my life. And when my father passed away, when I was 18, I opened my own company with toys in Buenos Aires.
And so you sold toys first?
Yes, wow. In Buenos Aires. And you see, whatever I put in my mouth after my 18 years old, I pay for it. You see, it's like I was, it was a, I don't say it was a tough time. It was, because, people, we like a human being, we settle down wherever it comes, and life is good for us because we don't feel when we're through bad times how bad it was.
Yeah.
And then when I was 24, my country changed the economical things. I lose a lot of money. I have an accident with my car, a very, very bad accident. And I was very depressed, and a good friend of mine who lives in the San Fernando Valley told me, because I had two options. So I kill myself, or I'm going to go to the United States. I mean, it was the thing, right?
Wow. What a joke.
It was a no-joke. It was the reality, because for me to live, I was going to be I was from there. Then I came to the United States. I was 24. I delivered newspaper in the San Fernando Valley. I was a busboy, where in Marmalade, in the San Fernando Valley. I was the busboy there. And I worked for a company as a typewriting. I was a messenger of packages. And that's my story. And then when I got the green card, after a while, when I applied, I say, well, I like to be with people. I like to educate people. That's what I was doing also in Argentina when I was selling, not only because in the last 4 years I was in the computer company. and say, well, if I like this, why don't I start with a profession for when I'm gonna be leaving me connected with people and at the same time helping them to do something, something different and a change in their life. Uh,
Absolutely.
and then, my first job was to sell cars in East Los Angeles, but I didn't like it.
You
I,
didn't like the car selling. Yeah.
no, the car sell. I couldn't sell. I was always my life selling, but I cannot sell things that can be negotiated.
Mm,
I'm not good for that. You see,
yeah.
so I want to try the best price for whatever I'm selling to everyone. So I can
Right.
be, okay, this car $5,000, for Mr. Brown, and it costs $7,000 for Miss Grandma. I cannot play that way, and then I was only 1 week there, and this is not for me. And then I say, well, and it was someone who was in charge, who knows someone, in the life insurance company, that they at that time they were taking captive Asians. And I said, Jorge, why don't you try that one? And then I went to this company. They trained me. Let me say the truth. It took me 4 times to do the license because I couldn't go through them because they're English and I didn't understand the questions actually. So, so then after 4 times, I knew if the word annuity is here, then you had to look for long term on the other side. I mean,
Sure.
so, and then after 4 times I passed it and I start to meet people. But the other problem was how I'm going to meet people because I was an immigrant. I don't know, I didn't know anyone here.
Yeah. English second language. And
Second language are maybe 50%. No. Well, I remember so in in this company they told me, Jorge, the way to do this is you had to do 100 phone calls a day. Because at that time, the message didn't exist, email. And I say to myself, hold on, I mean, 100 phone calls with my Boston accent. You think it's someone,
it's
who understands.
interesting because, when I got into real estate brokerage, that was essentially the same instructions. That's the only way to fill your pipeline. And it has, it's changed a lot, but it's still, I would say, in many agents' uh, business plan, that is still the main way to reach out to people, uh, you know, that you haven't talked to before or that you want to do business with.
Well, for me at that time was impossible, Don.
Yeah.
Impossible. People who want to talk with me, even if they were going to answer me, I
Yeah.
was going to understand.
Yeah. Yeah.
It was 50, 60%. Then I started to walk the streets in East Los Angeles, Panorama City, people who speak Spanish.
Wow.
Yeah, I know to introduce myself when I was doing. I remember, and I will have the feeling all my life. I was in this building, in this insurance company, in the 9th floor, looking to Wilshire, all the way, the little houses, saying to myself, how you are going to do this, Jorge.
Yeah. And you found a way.
I found a way. I found a way with my foundation, with the Hispanic Business Network that I founded at that time. I found a way going to different network meetings in
Yeah.
Spanish in the beginning. I found a way, walking the street. Don't Let me be honest.
Yeah.
I don't know how I did it. I look at my house. I look at my child that they went to universities. I look at the kind of car I have. Thanks to the United States. This is something we can talk about it because we can do with the best men in the world. But the other side, we have the United States of America. And I don't know how I did it, but I did it. And I was involved in different organizations. I was involved in different non-profit. I was a chairman of different other places. I was in the board of governors of the city club. I was nominated to be in the California Fair. It was the fair in the San Fernando Valley. I was in the board of directors there. I was nominated by the Schwarzenegger at that time. And I start to be very, very well known in the Hispanic community in the beginning, but after 15 years in my profession, I start to go when my English was good enough in the English Hispanic, in the English language. Uh,
Yeah.
so
Well,
did
that's definitely a testament to your persistence and finding a way.
persistence. This is the word. This is the word of secrets. Is education and persistence. It's not luck. Good luck, when it is when the opportunity goes and you have the talent and the education to put them together. Then you have
Yeah.
good. And yeah, yeah. And now, I am, in this group improvisers where I'm very, very happy. And I have done a career where people recognize me, and when I took, when they thinking to have the need of life insurance, disability, long-term care, and group health insurance I'm doing now, they call me because, well, after 25 years, I always say, if someone is talking wrong about my business and what I have done, let's have lunch, three of us.
Interesting.
Yeah, let's do it. Because something he didn't understand. But I was always, in the way of the client. And I really believe, that life is like a boomerang. See, when you are giving, it's coming back in one way or another. Yeah, yeah. And in the Hispanic community, I'm very well known. I have nominated I have a nomination in the San Fernando Awards.
Yes.
They have given for 64 years. I have been nominated 2 times as a good leader because the way I help in the Hispanic community.
Oh, that's tremendous. Tremendous. Well, you touched on it a little bit. So I wanted to ask, you're very experienced in when it comes to the all levels of insurance, life insurance, et cetera. How do you approach, assessing the unique insurance needs of individuals, specifically, if you can tie it to anything real estate? I don't know how many of your clients are connected with real estate in some manner.
Okay, so well, I have a lot of clients. They are in the real estate business. See, and when we are talking about life insurance, we are talking about a lot of people having real estate have a lot of debts.
Sure.
So what happened if something happened to one of them? He passes away. How he gonna go with the debts? Maybe they have another properties, but are they going to be sell that properties at a good price at a good time?
Yeah.
Life insurance then is a peace of mind. And some people, and we were talking about the life insurance with cash value. That maybe you want to talk later about it. Um, People say, well, the best investment is real estate, and I really think so. I'm agree, it is, but we have to have the eggs in different baskets. And one is the peace of mind that life insurance giving to me. Because if something happen again, how am I gonna cover? So I have a lot of real estate agents that they are thinking about life insurance to protect their family because they have money right away, tax free, as soon as something happens.
Yeah. And if God forbid something happens during a lull in the market or during a downturn, where you wouldn't ideally want to sell a property, the life insurance would be there to either continue paying the mortgage payments that are necessary, or possibly pay off the entire mortgage if it's large enough, which would just put you in a much more flexible position to hold longer term until the market turns to a better market, and then you can realize a better profit that way. So it does offer that flexibility, in the event of something catastrophic and unexpected.
Well, this is what life insurance is about. I'm talking about life. Also, we had two products. We have a term insurance that covers only the money, that we put. We pay the premium and we got a tax-free death benefit. But also, we're talking about the liquidity of money that can be in the cash value of this life insurance. But basically, for real estate and for investment, most of the people who have real estate and doing investment have debts. And life insurance is going to cover that gap. There's no doubt about it.
Absolutely. Absolutely. So, I'm self-employed and many of my audience is self-employed, a lot of real estate investors. How would life insurance play a role in securing their investments and providing for their families? Specifically touch on maybe the cash value, life insurance.
Okay, the cash value. First, let's if you something that surprised me is that the life insurance with cash value is not known by almost 60% of the people. So again, 60% of people that invest money don't know the beauty of the index universal life insurance. I say the
Index universal.
yeah, I say the beauty. Why? Because it's liquidity if I need money. It is safety because the cash value is going, based on different strategies. That put it in Bloomberg, that put it in SP 500 index. And the safety is the market crash, you don't lose any money. Then the beauty of the rate of return. The rate of return has been given between 6 to 8, 9% in the last 20 years as an average. And the other beauty is the tax advantages. Because this money is growing tax free. Why tax free? Because when you get the money when they get the interest every year, they don't get any 1099. It goes into the cash value compounded. See, so this
That's where the magic is, the compounded.
compounded and the tax free when you take the money out. You take the money out as a loan, but it's collateral with a death benefit.
Right.
You
Right.
see. So you can use for emergency. So it's a product that a lot of people don't know, and it's a big piece of mind. On the top of this, there are some kind of life insurance that also they have living benefits. And the living benefit means if I go to the doctor and the doctor says, Jorge, we got bad news and good news. Bad news, you have cancer. Good news, we're going to cure you. But you have to stop working for 3 months. I can go to the proceeds of the life insurance. I repeat, not the cash value. If it is term, also I can go to the proceeds of the life insurance and take $50,000, $60,000 tax free. If I need long-term care because someone had to take care of me, same story. I can go, and people don't know this. And this is why my profession is so necessary, because it's an education.
It's one of those topics that people may not want to be thinking about, but it's absolutely necessary, and especially when you're talking about the rising costs of healthcare, the rising costs of long-term care planning. If you're without this type of insurance, it's a big deal.
Don, something that I learned in life, for me, for you, and for all of the audience, and for everyone, there are a lot of things that are very important, but no urgent. So it's very important for me to think about life insurance.
Yeah.
And I don't do it because it's no version. There is a lot of, it's very important for me to think about to do a living trust. I have a lot of real estate agents, they don't have living trust for themselves. It's important. It's so important, Jorge. You haven't? No. Why? Well, because it's important. You wake up in the morning and you are thinking how you can invest in real estate. You are thinking how can I buy the good deal, to buy this in 1 million and sell it in 1.5 million. You are thinking how you are going to make money. That's all you are thinking. You are thinking how you love or you don't love your wife. You are thinking about how you like to be your friend. You are thinking about a lot of things, but you don't think about to do a living trust for your ass, for your And I
Yeah.
blame anyone. You know why? Because we don't like to think about the things.
Right. Right.
Once we think about this and we resolve it, it's done. I don't think anymore. So it's something if I pass away today, my family is covered.
They're covered. They're
And
covered.
yeah, and the other good news is that when I'm thinking about I have to buy life insurance or I have to do a living trust, it's something that happened to me and say, okay, I'm gonna do it. If I don't do it, you go all the way 6 months, 1 year, 2 years until I think it again. So the idea came. I had to do it. I had to do it. I had to do it. But sometimes the problem is when these things that is very important but not urgent go to the important and urgent. Because then you know what it could happen. It could happen that I get sick, so I'm not covered anymore. Then I don't need insurance anymore. It's too late. What will happen? What will happen that my wife and I we can die, and then we don't have the living trust, and we put our families in the worst name
Oh yeah.
to get so.
Probate. You deal with probate. Many of my clients, and their kids, I find, something happened and now they're in probate, and just the extra
Yeah,
unnecessary expenses that they
and
find themselves with.
1 year, 1.5 years to get things done. How long is in California now? It's not
Oh yeah,
done.
it could be longer than that if there's any kind of dispute. Sure. But yeah,
Exactly.
it takes months to a year. Yeah.
Yeah, I have the family. I know families having a nightmare because of that. Important things and urgent had to be done as soon as possible. And then
Absolutely.
we don't think, you know why? Because I didn't, but I'm gonna live 100 years, no doubt about it.
Absolutely.
Yeah.
Absolutely. So and we may have skipped it, but you also do disability insurance, and you touched on it a little bit. So the disability insurance, that's not something that I've really heard you talk about too much, but maybe explain, how important that could be for somebody that does run their own business.
You know, something that is very no weird. I don't know the word. I have a lot of clients, and the first one who buy disability are doctors. Believe me, if doctors receive, though I'm going to start to see patients, they call say, Jorge, I need
So the
disability.
doctors, they see so many cases that they
No
they're the
question,
most
no
concerned.
questions about. I mean, it's how much and this is not funny. This is the truth. This is the real truth. They are seeing the reality. See, so when you get disability, the insurance company is not going to give you all the money you want for disability. They're going to say,
Sure.
give me your 1099, and then and then I will see your 1099. I will see your 1040. I'm going to see how much money you're making, and then I'm going to be able to say to you, you're going to be qualified for 60% of that money, tax free. Okay. So the doctor, they start to send, the 1040. So I need insurance. And every 5 years, if they start to make more money, they call and they say, I want more. So disability is one of the, all the insurance are important. Okay. All of them. But disability is the insured of the income. I don't know what is more important than to have income. See? And again, some people also doesn't know how it works. Some people know that it exists, but there's a good insurance company that they do only disability, and it's not as expensive as people think. By the way, I'm a broker. That's something I didn't say. What means that according to the product, life insurance, long-term care, or disability, or group health insurance, I shop around and I see which one is the best deal. But disability, again, is a big, big piece of mind. I had disability all my life. Yeah, because something happened, some people had a way to feed their family, some people don't have a way to feed their family.
Right. Right. No, it's important.
And
Yeah.
disability also is for good. I mean,
Oh,
if
interesting. So that's not something that
well, I'm sorry.
expires.
I'm sorry. Yes, expiring when we are 67 in California.
Oh, 67. Okay.
Yeah, 67. People
And is
also,
there an age past that you think it wouldn't work out for disability, or are you trying to keep it under a certain age to be in the best possible position, or is it always worth it to get disability?
I think it's always worse to get disability because also the disability insurance is something like the premium is related to the waiting period and to for how long I want to have the benefits.
Hmm.
So one premium is gonna be say, okay, you know what? If something happened to me, I want the income tax free. I repeat within within 30 days
Got it.
until I am 67. Okay, then it's gonna cost me $10,000 a year. Let's say something. But if I say no, 10,000 is a lot. So let's have my disability. Let's go for 6 months waiting period, and I want them to pay me only for 5 years. So in 5 years, I can settle down, sell things, sell real estate, and I get. So it's not be $10,000 a year. I'm gonna be maybe $4,000 a year. And
Interesting. Okay.
I can play
So
with this
there's different ways you could play with it to make it, effective.
affordable, and the most
Yeah.
important thing to have within your budget. But something important in disability is that once you get the premium, it will not increase, no matter what. You always keep this premium for the rest of your life, wherever you get healthy, if you get, if the people get some kind of disease, so it doesn't increase. So the premium is gonna set, it's gonna be level.
Oh, that's terrific. So here's an interesting question. So when you're reviewing a client's insurance portfolio, what common gaps in the portfolio do you find, and how would those be addressed?
Okay, when I have the opportunity to see what the clients that have been doing this maybe more 1,000 times in the last 25 years, I go with the whole thing. So I ask which kind of car insurance you have, because I find some people, I don't do car insurance, but
Right.
I find some people that they have a lot of money, alta gama cars, and they have $25,000 liability. I
Wow.
found them. I found them because they're looking for prices, and the agent they have is not a good man. They have 5 cars, gamma, and they say, okay, the price is gonna be, this one, and of course, much more inexpensive than the other guy, because this one say, but they didn't say $25,000 liability. So I
Right.
take a look. My first question is, do you have an umbrella insurance?
Umbrella.
Yeah, because if you have an umbrella insurance, the liability in the car is the maximum. If they say, I don't have umbrella insurance, well, see the liability of your car, because maybe it's $50,000. Exactly. You hit the Mercedes Benz, you have to pay. And it's nothing Mercedes Benz. I mean, you kill someone, they
Sure.
are money for the rest of your life. So this is the first thing. The second thing that I ask is to have a living trust, to have power of attorney for health, power of attorney for financial. 50, 60% of the people don't have it. Again, important but no version. I had to do. Another thing that I ask is about disability life insurance and health insurance. Health insurance, a lot of people has, and they haven't taken a look for the last 10 years. So, they are paying maybe the fortune, and they don't know all kind of opportunities that they have, because, they didn't take a look. So they're paying high prices. By the way,
Yeah.
with the car insurance, it happened the same thing.
Yeah.
People have always the same car insurance. They don't take a look. The company increase the price, and they then shop around in other places.
Right.
And when
Right.
you shop around with another places, you can lower the price because you will find better deals.
So it sounds like you bring a lot of value because you're able to help clients balance adequate coverage with affordability, and you're able to see any red flags if somebody's either got not enough coverage for what they're paying or something along those lines. You're able to address that in a couple different ways.
Yeah, and also I ask for financial planning, what they have, if they have 401k plan, if they have bonds, if they have stocks, how they are saving taxes. So if I feel that something is not correct, or they didn't do the due diligence to take a look at these things. In other words, if I have a feeling that someone doesn't have the correct car insurance and or home insurance, then I refer to someone, to an agent. I refer to another professional. I don't do that. If I feel that they are not maximizing the 401k plan, or if they don't match, well, if they don't use what the company is matching for them for the 401k plan, to maximize the 401k plan is another question. I don't know if if it's a good thing or not. It depends on the situation. But if I know, that they have, I find people with money in saving for less than 1%. I'm talking about $750,000. Again, I wake up in the morning and thinking, how am I going to buy a house? How am I going to sell the house? But I have $750,000 at 1%. So in that case, refer to a good financial planner and working with someone very, very, very. I have different people can refer to also. So I take a look at the whole thing, and then I see what the mistakes are. And after 20 years, I know exactly what the mistake, where they are. And of course, I have referred it to leaving trust to a lot of people, with a lot of lawyers.
Oh, terrific. Terrific.
Yeah.
So I guess this is a little bit of a sensitive topic, connected with insurance and estate planning. How would you discuss, how insurance plays a part in the estate planning for, specifically people who own real estate for investment purposes? One thing we touched on during my own dialogue with you was you brought up the idea of I believe it was called a buy-sale agreement, and how that could assist in the smooth transfer of assets, in the event that one of the partners or one of the members of the LLCs end up passing. Want to touch on that?
Yeah, the buy-sale agreement is, something when you have an investment with another partner that, what's going to happen is one of the partners pass away.
Right.
Okay.
And that's tied to the specific entity, the LLC, correct?
It's tied with anything. I mean, if we are partners in any kind of business.
Okay.
If something happened to one of the partners, the family of the partner who passes away is the one who can take decisions to the other partner, and the other partner had to do 50 and 50.
Yeah.
Not only in money, but in decisions. Now, in the LLC or in corporations, maybe it can be driven in another way, from where, because they are shares holders, maybe we don't need a buy-sell agreement there. You see? Maybe we don't, because in the way it was said, something happened, they don't have. But, this is something that all the lawyers have the questions. Of course, we have to do the disclose that whatever the advice I can give, about
not financial advice or estate planning advice. Absolutely. Yeah.
No, I'm not a lawyer, no. But I have cases for real estate investment that they need the buy-sell agreement. And another cases says, Jorge, we think we don't need it. By the way, if we are talking about the life insurance with cash value, and if the cash value belong to this corporation or to do the LLC, we are talking about not only the life insurance that is good to have if my partner pass away, but at the same time it's good to have because I'm saving money tax-free at the same time. You see? So, and with the LLC, when the LLC is the owner of this life insurance partner, it's not taxable at all.
Yeah.
You see, so it's a big thing.
Right.
Because it's a peace of mind something happens, but at the same time, I can have the opportunity to grow cash value in those life insurance that can be used for, for an income supplement, or when they finish, if one of the partners want to run away and leave, he can take the life insurance with them and use this as a tax-free retirement in supplement with the 401k plan or whatever they have, or the Social Security. It's very, very, very strong. It's a very, very good idea.
Yeah, it sounds great. Here's an interesting question. It sounds like a lot of the recommendations that you make, once they're in place, they could be, in place for an extended period of time. How often would you recommend that people either review or update their insurance policies?
Well, this is I think it is called like a rule of thumb.
Yeah,
Yeah. I recommend every year, but no more than 3 years.
no more than 3
No,
years. Okay.
no, 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 no. Because, always there are some special events.
Sure.
For instance, people get divorced.
Right.
For instance, people get married. People have more
More
children.
children. Yeah.
Right, 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 right. People buy a house and they didn't change the thing for the living trust. You know how many I found of those?
Yeah. Life
People,
happens.
eh?
Life happens.
Yeah, yeah, but I mean, people. One of the things that I found is that people bought insurance, the life insurance, a long time ago, and now what they bought is not enough because they grow
Oh yeah.
in the
Inflation. Inflation.
inflation. No, the inflation is not as much. It's as much. It's more the level of life change. So they
Yeah.
have more debts. They have
Yeah.
more kids. They have more need if something happened to them.
Sure.
So,
Sure.
I started with 500,000. Now I need 1 million. Another thing that people also don't know when they buy term insurance
Yeah.
is that after a couple of years, that policy is going to increase the price because the term insurance you can buy for 10 years guarantee, 20
Right.
years guarantee, 30 years guarantee. But I found a case I found several cases like this that they got the insurance for 10 years ago, and the insurance is going to finish the level premium. It's going to finish in 1 year. But after 1 year, the price is going to be so high. At that time, maybe they should replace the policy. They should increase the policy.
So that would be an instance where it would need
Yeah,
to be
yeah,
reviewed and
yeah.
updated, to maximize the affordability there.
And another thing that is very important for term insurance is that I found also when I do the policy review. Term insurance nowadays, things change in the market,
Yeah.
right? I mean, the products improve. Life insurance now came with living benefits again. Critical illness, chronic illness like long-term care, Alzheimer, terminal illness, and insurable illness if I have an accident in the car. Okay? So the peace of mind now is not only if I pass away. The peace of mind if something of those things happen to me. Now, if I got this policy 10 years ago, and it's a term policy,
Yeah.
maybe those benefits are not there.
Interesting.
Yeah. So if they gave me the opportunity to take a look, and when I take a look, if I compare with a new product that have all of these things at the same time, Jorge, the difference in price makes sense because I'm going to get this policy now. I'm going to have another 10 or 20 years at the same price. I'm going to have these living benefits at the same time. And now the peace of mind, when I'm talking about term insurance, I'm talking about peace of mind. Term insurance is when I put money there, I will not receive anything back. But when I wake up in the morning, I will think something happened to me and my family is going to be happy in some way. Okay, no problem. But the peace of mind now is not about dying. The peace of mind is about what happens if I get sick and I cannot produce money for my family. This is a
Sure.
thing that people, if people listening to this podcast have their broker, they're taking care of them, call them and say, you see, I have a podcast that Don Fabio was giving to us, and I need to know what living benefit is because it's a big thing. Now, for people who has money who can invest, that the money they don't know where to put it. Okay, this is different basket. One basket is universal life, index universal life. Tax-free, liquidity, safety.
So that's interesting. So you touched on index universal life a couple times, and this isn't. This is something that I just thought of now. Can you explain, the main differences between index universal life and whole life,
Of course, yeah.
which I think is another type of
Yeah.
cash
Yeah.
cash policy?
Well, okay, I'm gonna be honest, okay, and maybe some people will don't like what I'm saying, okay, but let's see what I think. I think that one is an old product,
Old.
old,
Old. Okay.
and the other one is a new product.
Okay.
All life insurance has been, I believe, almost 100 years.
100
Okay,
years.
I think it's one. It's I said 100. I had to ask you. You got me with this one. I'm gonna as soon as I hang up, I'm gonna ask my
We got to
friend.
find out. Yeah.
He's
But
an
it's been around a long time compared to index universal. Yeah.
London. At least when I started with my profession, it was there like the beauty of the life insurance that it really was a
And did
beauty.
you sold a lot of those policies?
I sold some policies. Yeah, it was the Impala. You know Impala? Remember the Impala,
Oh, the Impala. Yeah.
the Impala Chrysler? It was beautiful. Yeah.
Yeah.
Okay. With whole life insurance, the index, the rates that is making is based on dividends that the company is giving to the policy. Means you are the owner of the policy in some ways. Sorry, you are the owner of the company in some ways, and you belong to this mutual company because they're gonna give you dividends in this whole life. Okay, they don't have living benefits except the last one they are putting some long-term care.
Okay.
But you have always to. It's not flexible. So in the universal life, you can pay the premium, but if 1 year you don't want to pay any premium, you don't pay any premium. But also, the most important thing that you can low the death benefit. Let's say I got a death benefit now with $2 million. And then after 20 years, I say, you know what? I don't need $2 million anymore. I need 1 million. You can decrease.
Okay.
Yeah. And because the whole life is paid by dividends, if you ask a proposal, if you ask an illustration for the policy that you got, let's say 20 years ago or 10 years ago, and you say, okay, I'm going to keep putting this money in this policy another $10,000 for the rest of the policies. If you got this money and you put in an index universal life, and you play the same game, we have the discount value, and I'm going to put $10,000 also in this index universal life. In the index universal life, you have a lot of more money because they don't pay dividends. They pay interest based
Yeah, it's tied to an index, correct,
that
versus
that the
dividends.
Brunner, like the SP 500, that like the base setter. So there's different indexes. So the difference, so it's more flexible. The whole life, the whole life is, and I don't know if you can deduct, if you can change the death benefit in the whole life. I don't. Yeah. So
The
if
whole
you,
life appears like more of like a dinosaur, and compared to something like index
yeah,
universal life these days.
the good for the whole life, then what what they say, the good is like they say, okay, but we have in the life insurance, you have the guarantee side and the non-guarantee side. The
Right.
guarantee side is what happens if it's something that the company had to show. What happens if the index is not given more interest for good? Something that never happened. I mean, if it happened this in
Sure.
the day, we have another problem.
Right.
Okay. So when you compare the warranty of the whole life is a little better. But
Okay.
but in the last 50 years, it
Yeah.
never happened. This never happened that we didn't have any interest. I mean,
So it sounds like the whole life, it's a lot more conservative, more of like a treasury bond, where the index is tied to, the stock market, or the certain S&P. And then for the last several decades, our country's been overall going very, very
well,
well.
after decades, yeah, this index having given. 7, 8, some of them 11%. But you can see this is what I want. We go to internet, we see.
So what? Here's an interesting question.
Let
So
me let me add something.
sure,
But the main thing with universal life is even if they're giving a good interest, compounded, is safe. Because if the market crash and you have $250,000 in cash value,
yeah.
next year you're gonna have $250,000 in cash value.
So the most important thing is that the principal that you've put in is safe no matter what.
Safe no matter what.
That's
Yeah.
huge. Yeah.
No, and there's something huge. In one company, I think two companies are doing this one. Is the index that you invested goes that year at 11% return, you can lock the index at
Oh,
any
you
time.
can lock it.
You can lock it.
Yeah.
And then if after this go down, you're gonna have 11% until the policy date. Because you change the strategies every year at the policy.
Okay.
So they say it's 11%. You lock, and then when they get to the policy, the anniversary, you go down again to the same game. So you decide you want to lock at 9, at 10, at 11. What you want to lock it? You don't have to call. It's automatic.
Yeah. Well, it's interesting, and I don't know if you would necessarily approve of this, but one thing that I've been hearing a lot, I don't know if you know that I'm a bit of an amateur cryptocurrency person. A little bit of an amateur, but one thing I've heard recently has been people utilizing index universal life, putting cash into that and then borrowing money and then using that money, you're paying an interest on that still. You're paying an interest, but it's not consequential. You're borrowing against it and then you're buying cryptocurrency and then that's appreciating, especially something like Bitcoin. Over years, it's appreciating at a pretty high level. So you're able to keep your principal invested, borrow against it, and then buy more assets that are also appreciating. And what they do is they combine and then they're able to see their returns are even much more than the universal index by itself because you're adding the appreciation of the asset, which over the long term, I believe, especially now, it's scheduled to continue to go up significantly. I mean, I know you may or may not want to say, but what do you think of that type of idea? You're basically double dipping your investments and it's going up.
Well, okay. You say that people is taking money from the cash value of the life insurance and put it in yeah, it's perfect.
Yeah, they're borrowing, they're paying a small interest, whatever the interest rate is on that, and they're buying an asset that's appreciating at a much higher percentage than the interest.
Well, why am I be against that?
No, I didn't know what type of stance you had, but it sounds great, right?
This is how it works. That people don't know. When you have, let's say we have $250,000 in cash value in this index universal life.
Yeah.
Okay. Let's say we want to take out $150,000 to do any investment. Okay. They don't take the money from here. Here you make. Let's say you're here. You're here paying. Getting, let's say, 7%. That is, it's conservative in this policy. But let's talk about 7%. You give this a 7% compounded. The company give you money from the company. Here you have 7%.
Yeah.
Right?
So it's the principal still growing. You're paying the interest on the loan.
4%.
But that's just all.
I haven't seen more than 5%. It's 4%.
4%. Wow. 4%. That's, who's going to give you a 4% loan?
Well, these policies.
Yeah.
No, sorry. The insurance policy is given to you based on this.
The cash amount.
Collateral.
Yeah.
So you here make 7%. Compounded. Here you are paying 4%, but you get this money and you put it, and you put in the Bitcoin.
That's exciting. Yeah, you buy some Bitcoin.
You are getting 7% here.
Yeah.
You get the Bitcoin thing. And let's say your policy is $1 million.
Right.
Okay? And let's say you have 250 here, 7%. Your death benefit is 1.250 time
Yeah.
free. That's perfect.
Yeah.
Something happened. The insurance company pay 1,250,000, pay the loan, you lose 4%, you make 7 here, and in the Bitcoin you make, I hope, I hope you're right. That's gonna go good, okay?
I think yeah, we're there.
But if you lose the whole thing here,
Yeah.
you're still making 7% here, and you
Right.
still pay 4%, and
Yeah.
this thing is gonna pay by the life insurance when I pass away.
Right. Right. No, it's wonderful.
You
So
have
we're
your
wrapping up.
own.
We're wrapping up here soon. But what's one best advice that you would give?
Let me
You
say
know, somebody.
let me say something else about the life insurance,
Sure.
the index universal life. If you don't want, I mean, if you want to keep all the cash value, okay, after 59 and a half, you can say to the company, I have this money, 200, 500, whatever in the cash value. I want an income stream for the rest of my life guarantee. And it's like you convert this cash value in an annuity. Okay? It's not an annuity, but it's like an annuity because they gonna give you this money guarantee for the rest of your life tax free. And I'm gonna give you an example. I close a case, he's 50 years old, he gonna put $25,000 every year. And when he's 65, he will not touch the money in the middle. Okay? He needs the money, he can take it. He will not. $25,000. When he retires, he's gonna be able to take out $43,000 for the rest of his life, guaranteed on. And at the same time, he has $250,000 insurance for the family, plus the cash value he was keeping all those years.
That's interesting because you normally, when you think of life insurance, you don't think about it. At least a lot of people who don't know it very well, they don't think about it as something that will benefit them while they're alive. And this is so much more than that, both in what we were just talking about with the loans, but also this annuity thing. It's tremendous, especially after retirement.
Is that 43,000 tax free for someone who's gonna be for someone who's making a lot of money and his tax bracket is gonna be always more than 40%, 40
Oh yeah,
plus. It is. So that's why when I'm talking about the beauty of life insurance. It sounds crazy, but the thing we all are gonna live 100 years. It's not a dying is a peace of mind, and getting sick is a peace of mind.
yeah.
That's why term insurance is so expensive. I closed one policy, $2 million, for someone it's gonna cost him something like $1,200 a year. Why? Why the company is giving that price? You know why? Because they know he's not gonna die. That's why. He's paying the peace of mind in term insurance. Yeah. But in universal life, something that all of the people with high income and high taxes, have to take a look.
That kind of runs into my next question that I was going to ask. What are some pieces of advice you would give people who invest in real estate or just anyone, regarding their insurance planning?
First, get the opportunity to talk with their brokers or with me. They don't have someone who is taking care of them. Make the comparison. How much money they have if they're putting money now for retirement plan, let's say, and do the comparison. How much money you wanna have in the 401k plan? How much money you wanna have in any other investment? Go just for 6% to be, to be fair to all the investments, and let's see how the end is, how the results is, because most of look for your set plan to your Roth IRA plan,
Yeah.
and see what the difference is gonna be, and it's a huge difference. Now, for people investing in real estate, this is very special people because they don't like 6%. and I'm agree. They don't like 10%. And this is business people. So life insurance for them is peace of mind to cover the family, peace of mind of having something happen, and put some money in the index universal life, to have as a backup of what happens if the real estate doesn't go the way they all dreams to go. See, so it's like the life insurance is how can I say, no, it's not as exciting as the real estate investment.
Well, you could have fooled me because I've had a very exciting time today talking with you. So, to wrap it up, for listeners interested in evaluating or updating their insurance coverage that don't have a broker, how could they get in touch with you if they wanted to speak with you directly, Jorge?
They can find me on LinkedIn, Jorge Rabasso. I am LinkedIn, Jorge Rabasso. I have a page, rabassoinsurance.com. They can quote online. They can make an application online if it's term insurance. If they make an application online, I'm going to be aware of that. So I can call them and say, what for you it's best this, and this. And, the beauty of my profession is I become, I have people I know for 20, 25, 10, 15 years. And, I really have a relationship. This is not something like, I close a case, I don't see them anymore. It's not that
Right.
way. It's not the way I want to.
Yeah.
I want to, So I am with them. I am the why of my profession is not sell insurance. The why of my profession is, sorry, let's say it again. The why of my profession is to help people to understand how insurance can be very helpful for them, economically, peace of mind, for the family. And someone has to motivate people to do things. And in my case, my mission is to protect, like with disability, with group health. Group health is another thing we didn't talk. But, group health also, they will save a lot of money. No company has group health insurance. And they didn't take a look. I had a case from where they have 18 employees. They gave me the opportunity to take a look, and I making them save $1,500 a month. $1,500 a month for the owner is something he can put in the life insurance, in this universal life, and in 15 years, he's going to be covered and having all the stories that I told before. He can catch value, etc., etc., etc. Yeah. So my mission, and again, I did this, and I'm going to keep dying doing this because I really feel good when I can make a difference in people's life.
Oh, that's terrific. That's terrific. Well, thank you so much. This has been an exciting hour, and I really appreciate your time, and revealing time has really flown. Yeah. But really appreciate everything you've said and the light that you've put on insurance for us here today.
We have been 1 hour already.
1 hour, 59 minutes in counting. It looks like so.
Oh man, talking with you is buenísimo. Yeah.
Terrific. Well, it was good. I'll see you at our next networking event, and it's been a pleasure.
No, I appreciate me, and I appreciate what you have done. And I appreciate what you have done with all the people you invite to your podcast. You're helping people, the people you invite, and you're helping also the people that listen to this podcast. Because
yeah, absolutely. That's what it's about, providing a service. So that's one thing that we see both ways.
All is about education. It goes both ways. Thank you. Thanks a lot.
That wraps up another episode of The Deal Room. A big thanks to Jorge Rabasso for sharing his insights on how personal insurance planning can directly support your investment strategy. If you want to learn more or connect with Jorge, head to rabassoinsurance.com. And as always, don't forget to subscribe and share The Deal Room with anyone in the multifamily space who's serious about protecting their future. See you next time.